All right, welcome back to the Revamp Podcast. Today I have Alex Martyn with us. Alex is a real estate investor that does pretty much a little bit of everything, right? You've fix and flip, buy and hold. You did dispositions for Revamp for, how long was that? I'm terrible at timelines.
I think it was like almost 2 years.
2 years?
Yeah.
Okay.
Yeah.
That would have been my guess also.
Yeah.
Perfect. And today it's like you're growing a massive rental portfolio, primarily in Coatesville, Pennsylvania, right?
Correct.
So tell us a little bit about that.
All right. So I will say first that the first rental property that me and my partner bought was in Coatesville, and we didn't have any, connection to Coatesville before that. It just happened. We were just looking at markets in the area. I'm from Delco. My partner's from Middletown, Delaware. So it's like we didn't have a market that we wanted to really dive into yet. We were just like, hey, we just want to buy a property. It's a good deal. We want to buy it. We want to get in the game. So this property in Coatesville came up. It was a foreclosure. I think it was a HUD home. I think this was back in 2017, I believe, if my years are right. And we just bit the bullet. We said, okay, we think it's worth this much. We don't know for sure. We're still new at running comps and whatnot, and we're just going to go for it. Bought it for $50,000, put, like 25 into it, did the refi process, all as well. Went good. Like, okay, sounds good. Now, we enjoyed that process. We enjoyed that project, so we started to make more connections in Coatesville.
Sure.
Tried to see, who owns properties here.
Players?
Yep.
And that was the first rental property that you bought?
Yes.
Okay.
First rental property I bought. So started making more connections out there just throughout the years, really, and just trying to feel out the market. And then, we just started to tell people that that's our market and we will buy, send us your deals, and just snowball from there. And that's pretty much it. And now to this day, I think we own, 45 doors out there.
Beautiful.
And we're starting to get more into some commercial projects out there, with another partner that owns a lot of dilapidated commercial buildings, and we're repurposing them and making them into, spaces that we think the community, needs.
Hell yeah. That's awesome. I definitely want to dive into that because
that's what excites us. That's what we're
sure.
excited we're getting into. And then, I would love to talk about that more.
Absolutely. But first, I want to dive deeper into the landlord life, right? So 45 doors over the last, whatever that's been, 6 years, right? So what has that growth process looked like for you over the years? What are some of the struggles that you faced along the way and everything with building a portfolio? And if you could dive into that.
So in the beginning, obviously, it started out slower than you would like. You only know so many people in the community, and you're just trying to, learn the ways of deal finding and, finding, lenders to lend you money for the projects, all those different factors that come into buying, investment properties. So we start off with my partner's dad loaning us the money for that Coatesville deal.
Okay, so you had a private lender in place.
Yes, if you would call him a private lender. We basically just asked for his help.
That's a private lender. That's absolutely how I would categorize a private lender.
Connection. So we asked him, and he was more.
I don't want to undermine that because so many people think it's impossible to find private money, and it usually is so close to you, and you don't even realize
it's closer than you think in all aspects, and that's what I've learned throughout the years for sure. And it's really just being willing to have the conversations. And it's just a lot of people, I think a lot of the population just doesn't like talking about money or doesn't like. So I think that subconscious thinking disallows people to really, talk to people, about those factors. So I think that's a really limiting belief, in a lot of people that want to get into the industry. So going back to the deal, asked partner's dad, and he was more than happy to help us. It was successful, so he was hungry for the next deal. Okay, cool. Got one guy, on the plane. But obviously, to grow a portfolio to a certain size, this person only has so much cash available. got to expand a little bit. Got to have more conversations. We asked, him, hey, do you know anyone else that would be interested? He gave us a couple people. We talked to them. I started talking to my parents. My parents started to see what I was doing. Then, my uncle, then, my uncle's friend, and just, then even my father-in-law, my father-in-law's friends, just like it was all referral based too. Like we never marketed it out, like, hey, we're looking for private lenders. Like, we just completely referral based. So we value the trust that we bring to the private lenders that, work with us. It's a very trusted relationship, obviously, because, they're close to us and everything. So we make sure that the products that we're putting them into are, going to be successful in a sense. And obviously, we can't guarantee anything, but we protect our
right. And you have a track record, you have a history. It's like you've been doing this for a long time, and I know damn well that you've had projects that have not gone well. So have I. So has everybody. But you take care of your lenders and everybody else first. Yeah. And
I think that's another mindset you need to have as well. It's it's really making sure it's like that person worked just as hard for that money as you're working hard for making your money. Yep. So you're you really have a huge obligation in that factor. But that's one struggle. That just happens over time, in my opinion. Yep. I don't think you're going to be able to raise $5 million by doing one single-family rental project. Right. Like, that just happens over time. The more conversations you have, the more seeds you plant, that's just, inevitably going to happen. Yep. So the other struggle I will say is, this is a big one. Everyone talks about it. It's just deal finding in general. Sure. If you're not if you're not lead generating yourself, you better be, getting your ass up and going to a ton of meetings, meeting a ton of people out for lunch, networking your ass off. And that's what I did. That's the method I went for. Yep. So I tried to do my own lead generating. It didn't go so well for me, and I didn't enjoy it. I wasn't disciplined with it either. But it just seems like what worked for me was just really just having as many conversations as I could that week about what I was trying to accomplish with people, and then the word gets around. Absolutely. So yeah, that would be the other. Those would be probably the top two struggles. But again, it's going to happen over time. It's not it's not going to happen in 1 year. And from my opinion, like, look, I know people that have done super volume in like a 2-year time span and whatnot. That's great. Everyone has their own timetable. We just went the route that we went with like keeping our private lenders close to us, making sure that it's successful on both sides of the table. And, we made sure the deals that we were buying, just made sense to put in our portfolio. In Coatesville, it's a low income market. So you want cash flow. Cash flow is important. The buildings are old. You're going to have maintenance and CapEx costs throughout the years. So yeah, like a duplex could like produce like $900 in cash flow a month, but like, are you really making $900 in cash flow a month? Probably not, because you're gonna, have to replace this hot water heater. Things are just gonna happen. This door is gonna get, ripped off its hinges. It's, this window's gonna break. So with older buildings like that, you gotta make sure you have reserves in those capacities and make sure, obviously, you're still in the green, at the end of the year. For sure. And what I will say also is, when your portfolio grows, obviously it's just economies of scale. Like your portfolio can handle more stress on it than if like you only have like 5 properties. So it's like
yes and no, man. Because I've seen excuse me, I've seen some people also that have like bigger portfolios that are leveraged to the fucking gills, right? And as soon as one thing goes wrong and it's kind of a larger thing, it has a snowball and compounding effect, right? Like it can wipe you out. Like it doesn't matter if you have 100 doors and you have an expense comes up. It's like, it doesn't even matter like if you're cash flowing well, right? It's like you're bringing in 20 grand a month in cash flow, but you have one thing come up that it's like, oh shit, that was $150,000 expense that I didn't plan for. And on paper, I have a huge net worth. Right, I have a lot of equity, but it's not accessible because rates are high, right? So I can't refi because that would be a terrible decision, right? But now what's going to happen with the rest of my portfolio? Okay, well now vacancy is going to increase if I don't address this $150,000 metaphorical issue, right?
Yeah, that's a good point.
You got to have reserves as you grow, man.
For sure.
And I'm guilty of it as well, right? Like
through
growing, because it's like we're all
we
like,
just want to grow more. All right,
cool,
get this
man.
cash out of here. Get this cash out of here.
There's extra money sitting in the bank. Let's go buy another property.
Exactly.
Right?
So no, that is a good point. I guess what I should have said more is like it's how you manage your portfolio.
For sure.
True. Like so, and the way that we grew our portfolio was just straight burrs. Like we did the buy, rehab, rent, refi process. Like we literally did 45 of them.
Beautiful.
That's what we did. So we made sure that we bought a discount enough, and our rehab was in it. Am I saying they were all complete burrs? No. We've left money on, into the deals for sure.
When you say not complete burrs, that's what you mean. You had to leave money in the deal
so
when you refinance.
I'm doing a refinance at 3 p.m. I think I have to bring, like $10,000 to the table. Okay. But it still made sense to me in the regards like, okay, this property's still going to cash flow $300 a month. I'm going to get a 36% return on my money for the next 3 years, and then it's infinite return after that. Okay. So we've done that for sure throughout the process. But yes, going back to the point where managing the portfolio correctly is, not over leveraging. It's tempting to pull that cash out and buy more stuff, but like, you got to make sure. And I think since we did all those burrs, we did those initial rehabs. Right. So it's like,
you kind of can
it depends how you buy.
Bit more.
Yes, it depends how you buy the property as well. Like if you're not going to do anything to it, and then you're just going to stick like a Section 8 tenant in there, and just like, all right, cool. Like I bought this for $70, and it's renting out for $1,500 a month. It's like I rather put $35,000 into it, and then rent it out for $1,500 a month. And have less, a little bit less of maintenance and CapEx costs.
Are those numbers like your typical Coatesville deal?
Yeah. So, it's changed throughout the years. It's gotten more expensive throughout the years, obviously.
It's not getting cheaper, that's for sure.
So initially it was like we pretty much found out if we can buy anything and be all in for like $100,000, like we know the deal's going to work. Okay. So like that was like our buy box. Whether it's a single family or I could do a small duplex or whatnot. Maybe pay a little more for a duplex, but since it'll cash flow a little bit more. Now it's like probably like, 110, 115, depending on the property. If it's a regular 4-bed, 1-bath twin, that's 1,500 square feet. It'll probably appraise for, 150, 160. Okay. So now it's trying to be all in for like 115-ish. So it's that was the nature of the market for the last 3 years. It's just, the appreciation. So we got our buy box down pretty well out there for residential aspects. And, we're still making offers on things that get rejected, but we know that, they come and go, and sure. We just try to make the best decision that we can, that we think, how it will fit in our portfolio. So, and now we're trying to get more into, bigger asset class where we're kind of repurposing, a commercial building to really like bring more value to the community in an aspect. So that's exciting for us, and that's really like kind of like the gear that we want to like go towards. Not saying that we're not going to stop buying single families or like residential properties in Coatesville, but that's going to be our main focus is over that aspect.
Okay. And now, again, still focusing heavily on that Coatesville market, even with redevelopment type projects and stuff?
For sure, yeah.
How many like really larger buildings are there that there's even the possibility of redevelopment? I'd have to imagine not that many.
There's more than you think.
Yeah?
Yeah.
I mean, just throw a number at me because I'm sure you've researched. Are we talking like 100 or are we talking like 1,000?
Yeah, closer. I would say probably a few hundred.
Okay.
Yeah.
Okay, that's a lot.
300.
They're kind of like vacant industrial warehouse type stuff.
A lot of churches.
A
lot of churches that are closing down, and you're buying them from the pasture, and basically, that's our project right now. So we're buying we bought a rectory and a church. So it's 2 buildings on one lot, and basically our idea was Coatesville needs event space. Like it's a demand. We know that from, the Midway Arts building opening up, and then that warehouse got converted into basically like a multi-pod, like a space for people to put their events in.
Okay.
So that's always busy. And, one of our JV partners did a church on 6th and Lincoln that is a wedding venue. And now this one is going to be like a multi-purpose event space. It's like a little small for like weddings. You can have small weddings in there, but so like open mic night, birthday parties, fundraisers, theme nights, just political meetups, whatever the case is. So basically our job right now is like we're going to fit the space out for this. But the big thing that we're looking right now is for an operating partner.
Sure.
To come in and help us, really promote the place. They're basically going to manage the venue space and promote it and work hand in hand with the people that come in and do their events, and also have a food and beverage person come in as well.
I love it.
And we're going to be on like both sides of that puzzle. So like we're going to own the real estate as well, but also we're going to own a piece of the operation company that's going to operate the venue space.
I love it, but I still think that you're going to go to hell. Like you're in there demoing a church, man. That's got to feel weird, right?
Yeah, I know. No, it is. Like it was funny. Like
what religion was it?
It was a Catholic church.
Oh, you're definitely going to hell. You're going to hell, man.
Yeah, you see all the you see like the saints are like wallpapered like on top of the windows. And you're just like, okay, I'm literally ripping this down and like every cross like in here. But look, I mean, bless God. I'm doing this for a better purpose.
That's right. That's right.
Because again, if not, then
it's going to sit there. Yeah,
it's literally going to sit there for years.
It's a building. Yep.
So yeah, that's what we're working on right now. We're excited about that. We're hoping to get that completed by first quarter of next year.
So let's talk some projected numbers on that. Like, what did you purchase that for?
So it's a little bit weird of a structure if you want to get into it.
Look, let's go, man. Let's go. Because I think a lot of people are really curious about this type of stuff, and with any bigger deal, sometimes you do have to get creative. Yeah. So let's hear it.
So me and my partner developed a good relationship with a guy out in Coatesville that owns like a lot of units. Like, he's fully embedded in Coatesville. He has a lot of pull in some areas, and he has a lot of these bigger buildings, in a portfolio that he raised money for, and he had a partner with, but that partner, got bought out and things happened. And, so like he got left with it, which he wasn't really expecting either. So he's like, crap, like now I have like all these buildings that are vacant that my partner was supposed to like really take the reins and like, start like rehabbing these things and getting them up and running. But now it's all on me. So he has only so much bandwidth. So basically the handshake deal we have right now is just like, we're going to, he's going to basically pick some buildings and we're going to basically try and help him whatever way we can, whether it's raising more capital, managing the construction, getting crews in there, and getting it up and running. And then we get, partial equity in the real estate and also the operating company that we develop together to operate that space. So right now, the way that the deal is structured is he owns it in his LLC. Me and my partner are going to raise the capital to deliver this venue space.
So all of the renovation costs, engineering costs,
most of it. So he has a line of credit on the building that we'll use up, and then like we're going to raise the additional capital.
Okay.
Then so that's just going to be a promissory note that he's going to personally guarantee.
Okay.
Now I'm perfectly fine with him personally guarantee it because I know he owns so many assets that have a lot of equity in them. So like, it's not very risky for me and my partner to like, raise that capital like for that project.
Sure.
And we're also going to help deliver, manage the construction of it. So with those two pieces, we get, a percentage of the equity of the real estate of the rectory and the church, and also a piece of equity in the operating company.
Okay.
So, for us, really, I feel like lately, like what I've been trying to kind of like think about is like, I feel like the ultimate goal as an investor in any facet of, the industry is to limit your risk, get into things that you can limit risk, and then the potential is, more. So it's like your risk is here, but your potential's up here.
Sure.
So like how I viewed this project. I'm like, okay, we're raising this amount of money to get the project done. It's going to be personally guaranteed from a guy that we know, like, and trust, and that we know he has the money and
That's
assets.
Huge. Yep.
So it's like, okay, like that money, is really like not like risk of like being defaulted, and we just invest a little more of our time to deliver the space and get the construction done and find an operating partner, and we work on that all together. So I'm like, the risk is like very limited because it's like we have this personal guarantee on this note, but the potential could be 10x if we find a great operating partner, and like the demand's like wild for like the venue space and
so
like
I
the
hate
bookings.
that word if. What happens if you don't find a great operator? Does that mean you become the operator at that point?
I mean, I think that's a game time decision at that point. It could be like, okay, the space is delivered. The only note we have on the property is our note with the JV partner. So it's like, I guess that would maybe be his decision. Like, okay, do you just want to keep making payments on this note while we find an operating partner? Or like, do you want to just now like just dive in and just like try to like get some business rolling with our efforts? So don't really know the answer to that question completely.
That's okay.
Yeah, I would say, but again, for me and my partner, the only risk is him just not making those payments.
Sure. But nonetheless, that is a risk.
Of course.
That's a risk.
So in my eyes, in my relationship with him, that risk for me is very low.
Worth taking too.
And then this potential is much higher. So like that's the projects I'm going to try and find, in the near future with him, like, those same types of formats, because in my eyes, it's just like, that's how you can really like find that game changing deal in a sense where like you limit that risk like that. So
what would make this deal be like freaking fantastic? And so wait, how much is the rehab, the conversion going to be altogether? Like, what's the note going to be?
So he has 100,000.
500, 700?
No, not that much. It's pretty straightforward. He has a note for 100,000, a line of credit for $100,000
against the property right now.
So that we're going to use that initially for the rehab, and then we're raising another 200 to 250 grand, depending on what it is. So we're thinking around like 350 for the total renovation.
What are the taxes on that?
The taxes
actually,
right
that's
now,
interesting because they're probably nothing right now because it was a church and now it'll get reassessed.
Yeah, but they
right?
are. No, it already got reassessed. It's like I think it's just below 15,000.
Okay.
We already have them in the appeal process, though.
Okay. What do you think it'll get appealed to?
I would hope like around 10.
Okay.
That would be my guess.
Okay. But so like debt service plus principal, interest, taxes, and insurance and everything. Yeah. Once completed, what are you looking at? Probably around like $4,000 a month.
Yeah, that sounds about right.
$4,500 a month. Yeah. I'm terrible with mental math. I pulled that out of my ass.
Yeah, so again, the note, the note that we have is at 9%. So again, I don't know exactly what that monthly payment is, but
that's okay.
And then the line of credit payment, honestly, I don't know what interest rate. I'm assuming it's around there too.
Sure.
How line of credits are now. So $300,000 at 9%. Yeah, I mean, you're probably looking at, I don't know, somewhere in the mid twos for that, and then plus taxes and insurance. So I would say like $4 grand is probably a good guess.
And so right now, what is the plan? Like once it's up and fully functioning as a event space, like what do you project it could bring in any given month?
That's a fun question because I don't have experience in the event space.
Sure.
So really what I the way that we just analyzed the deal initially is like, okay, like what could the operating company kind of like afford as like a monthly rent payment?
Okay.
So we were thinking around like 5,000 a month.
Okay.
Now, I guess in order for the operating company to be profitable, you obviously have to do, X above that.
Sure.
But again, we're going to have control over the operating company. So it's like, we're going to have control on both sides. So it's really what we decide. It's like, okay, do we want the operating company to make more money, or do we want this real estate to be valued more? Because you can charge as much as you want on the lease.
Sure.
And then bring that to a bank and get the building valued at a higher valuation. So I don't, again, I don't have a direct question for that because I don't have very experience in the event space. But the idea is to basically it's a 24-month note. So when those 24 months is up is to do like a refinance event.
Okay.
Whatever that looks like, with the building, and like do like a cash out for, the operating partners, which is all the three of us, because he'll have his line of credit still and we'll have our, note that's going to become due. And then, what the numbers look like from there can range from, we could have the lease at $10,000 a month if the company's doing great, the venue company's doing great,
right?
Or it could be less if it's not doing so great.
So you have to have some projections as to like what it would be able to rent out for in one single day night event, right? Like what is that number like? Is that like $1,000 per event type of thing? I'm just trying to wrap my head around it.
So what we use the example of like theme nights, and like the way like we want to use that is like basically the way that we think we're going to make most of our money is on the food and beverage. So that's the way that we think we're going to make most of our money.
Okay.
So we still have to have those conversations, and we're talking to a company right now about that. We're actually meeting them next Thursday at the event space to like talk more about that and like kind of like what those numbers look like, and like because like they have experience in that. So it's AMA Brewery, they're in Coatesville.
Okay.
So like they have experience in those facets of like delivering food and beverage, to events, like in that capacity. So event wise, so like I said, let's say it's like a theme night. Let's say it's like whatever, open karaoke night or whatever.
Yep.
You get a cover at the door. It's whatever, $10. Or $20 or whatever, and that includes like one free drink or something.
Okay.
And then you go in, you get a free drink, and then the rest of the drinks, are obviously just paying the cost.
That just added another thing. Like, does that mean you need a liquor license?
Well, that they have a brewery license. So basically, with a brewery license, you can deliver PA liquor. So what that means is like any liquor that's like a PA company. So like Stateside Vodka.
Interesting.
You could deliver Stateside Vodka. You gotta find a PA tequila company that you can do. So
okay.
You can't just.
All
so
right.
It's not a full blown out liquor license. So the brewery license allows obviously any beer and facets like their own beer.
Got it.
But
and that allows
PA
them
liquors.
to kind of resell anywhere. Like if they set up a tent at an event or something.
Correct.
Like, okay, interesting.
Correct.
Didn't know that.
Correct.
Very cool.
So yes. So they have that already in place. And that's value in itself.
For sure.
So selling that stuff and then that's really like where we think we're going to make the money. But again, like, it's just really the biggest thing is getting the promoter like in place and then like setting up like costs. It's like, okay, you have experience in this. Like, how much are we charging for a birthday?
Yep.
How much are we charging for a fundraiser? Like how much, cause like what are the factors that go into that? That's the experience that doesn't come from us. That comes from the from the manager that we're going to hire.
Yep.
So we got to find that person, and we'll have more projections in that facet. So I know it sounds like I don't know what I'm talking about the project.
I understand
because it's like we don't have legit projections yet, but at the same time, it's like
what you know is that at the amount that the debt service, principal, interest, taxes, and insurance is, that it's like almost no matter what the numbers are, it's going to cover that.
Yeah, like that. Yeah.
Yep.
From our knowledge, again, it's still there's risk involved. Like,
For sure.
That's what we believe it will.
Yep.
You know, and I think, I think if we believe that it will, then like we will figure out a way for it to cover.
And look, that's honestly like that sounds so simplistic to probably so many people, but the simple belief in something that you're doing, or in a project, or in anything that you do, anything because
you're not the first person that's asked me that. Like, oh, like, you know, what do you think? You know, like, what's that company gonna make in the first year? It's like, dude, I have no idea.
Yeah,
like I literally have no idea.
Yep.
But again, like I revert back to it's like, but I don't have a lot of risk in it either.
Right.
So like if it doesn't work out, it's just like we just have this note with Crosby that's just gonna get paid out. Like, you know, it's just like that's how I look at it. And again, believing in the project is one thing. And like I think that's again, people try again, you go to analysis paralysis again.
Yeah.
It's like, oh my God, I need to know, like, is this company gonna make 50 grand this year or like 100 grand? It's just like it's like if you try to figure that stuff and you don't have any experience in that, you're never going to do it.
And it almost doesn't matter anyway, because any projections or analysis that you have in place for something that you haven't previously done, and it doesn't matter if you have associates around you that have experience in that realm, it's still like, dude, a projection and something you've never done is not much better than a guess, right?
Yeah, right. Exactly.
So yeah, no, I totally agree with you in that sense. But like, you have to have in the back of your mind like that pie in the sky, like what could this really do, right?
Yeah.
Like because you wouldn't have that belief in it without. So what is that for you? Like what is the master vision? Is it like, well, this deal in whatever 2 years, 5 years, when we refi, it'll be able to bring in $1 million? Like what is that potential for you that created that belief?
Yeah, for sure. So the initial vision was really, it's like, okay, in the first year, it's really just going to be about figuring like shit out.
In the first year, you're going to burn money. Yeah, you're no matter how you slice it, it's going to lose money.
The operating company is probably not going to make any money. Like, let's just be real.
Yep.
So it's like, okay, you're just figuring it all out. Like you're getting people in place here and there. Like it's like, okay, this works, this doesn't work, you know, all that stuff. So learn from mistakes, keep moving forward, like get people in place where they need to be placed. And it's like, okay, like now it's like, let's say like we're in like year 5. You know, like let's say we're in, 2028. It's like, okay, my vision is like we have the operating partner that's in place that's delivering the events that we need and generating the revenue that we need that, allows basically me, Josh, and Crosby to be able to basically manipulate the value of the building.
Sure, absolutely.
So it's just like, okay, like at that point in time, it's like, okay, cool, like we're gonna like the lease is literally, and this isn't gonna affect the operating partner's income or anything. This is just like on the real estate side. It's like, okay, like the lease is gonna be, let's say just to say $10,000 a month now. It's like, okay, cool, like our real estate expenses, because it's probably gonna be like a double net lease in some sort of way. So like literally like the net operating income is gonna be like X. It's like, okay, cool, like now this thing's like worth like $5 million or like like a few $1 million. Okay, dude, all right, now let's put like a larger loan on this and let's do a nice refi event, and now the operating company stabilized and you can manipulate those values really.
And so let's break that down, because I know that what we're talking about, it's very basic to us, but for most people it probably isn't, right? So how does the rent amount change what the property is worth?
Yeah. So for commercial properties, it's basic. It's just the gross rents minus all your expenses, and there's different leases in commercial properties. So you have just like a regular net lease, which usually is like normal, like the landlord will pay taxes, insurance, maintenance, like stuff like that. Just like if
like
you
a
own
normal
like a single
lease
family
that you would expect with
Yeah. So I mean, I'm sure people that have been reading around like triple net lease is like really popular now. It's like, okay, like triple net lease is basically like, I think like like the landlord basically doesn't pay anything. Yeah. So like the tenant pays the taxes, the insurance, the maintenance, the operating costs, the CapEx, like whatever goes on with the building and their rent. So basically you're just taking the gross rent from that triple net lease, and that's your income. That's your NOI, net operating income. And then whatever cap rate is kind of like the market cap rate in that area, you divide that by the cap rate, and then you get your kind of your valuation.
Yep.
So in our eyes, it's like, okay, like I think like a double net lease would be fair for, this operation company. We still pay the taxes and insurance, but then they pay like all like, maintenance and, stuff like that. Because we're going to deliver them like a brand new vanilla box basically. So it's like, okay, cool. Like all this stuff is new, man. Like, stuff goes wrong. Like, it's probably because of, your,
use.
Whatever. Yeah, you use.
Yep.
So, so basically that's how it gets, it gets valued.
So from a very simple perspective, it's if you were collecting $5,000 a month in rent, forget double net, triple net, all that stuff. If you were collecting $5,000 a month in rent and you somehow over the years were able to increase the rent to $10,000 a month, that in theory doubled the value of the property, not just the amount of rental income, it doubled the value of the property as well.
Correct.
Right?
Yep. Yeah, because there's the commercial, especially with like, spaces like that, like there's no comps.
Right.
Like you're just valuing it off like what this property
Net
is making.
operating income. Yep.
So that's what a bank's going to be willing to lend to you, probably around 75%, of the value from that calculation. And yeah, that's the vision that I have, and that's what we all have to an extent, I'm sure like, Crosby might have a little bit different of a vision with like the operating company, but like again, we're still kind of nailing down those like those situations that come about. So
I love it, man.
But yeah, we're excited about it. It's again, it's brand new for us, so it's still scary in a sense. But again, I've always been about just okay, cool. Like now I'm comfortable with just like buying residential properties. Like it's like basically like nothing to me now. No, okay, let's get into something that makes me a little uncomfortable. Like let's try to.
That's huge.
Yeah,
that's huge.
So
I love that.
It's finding those. I feel like it's just like a timeline. It's like okay, just having epiphanies. It's just like, and I kind of like had that epiphany. Like I would say, like probably beginning of this year. I'm just like, all right, like I just been like too comfortable lately. It's just like, and it just like pops in your head, like And I wish more people would have those epiphanies. Again, because I just see people, that like obviously they say, and they don't do, and it's just I feel I don't know how to explain it. I guess it's just some people's just like subconscious and mentality.
Well, it's risk tolerance
it's risk tolerance as well.
It's yeah, and I think I talk a lot about this. Like, I think there's a certain level of not just like risk tolerance, but you have to have a certain level of almost like ignorance to go into something new. Because it's like, all right, you have a lot of skills, you have a lot 100%. Of resources, you have a lot of connections and everything. But at the end of the day, it's like you're going into something new. It doesn't matter if you have the best counsel in the world. Yeah. It doesn't matter if you're around people that have done the same thing. You're going to get punched in the mouth.
Yeah.
100%. There's going to be things that go wrong. You're going to lose money on different occasions, right? There's going to be months that it really, really sucks.
Yeah.
And you even know that going into this, right? So somebody starting their first venture in real estate or business or anything, it's like they don't even really know that yet. But I think that can be a superpower because if you do overthink, overanalyze, like you said, the analysis paralysis sets in. If I try to think about every single fucking thing that could go wrong on this venture, I would never start. I would never start. I would have never started my wholesale company. I would have never started doing fix and flips. I would have never started building a rental portfolio and everything. Like with what I know now, now I'm glad that I did because, I'm kind of on the other end of a lot of that stuff. But that growth phase and that curve, it often sucks, man.
Oh, yeah. Yeah, I mean, just, again, people that...
But that's progress.
Yeah, it's all progress. But a lot of people don't see it as progress.
Sure.
So like they see it in another way, which, is...
well, it's easy to look at failure, but failure, like depending upon how you view failure is also how far you're going to go.
I mean, that's all just training your brain. I mean, it really is. Because like, again, we whatever environment you grew up in, you had, whether you like it or not, you have these subconscious traits that you have no idea that they're even there. You have no idea.
Yep.
And that's why it's hard, and that's why only some people, I think, have epiphanies at certain ages or whatever. But that's why, like, I just feel like a lot of population just goes through the motions. You know, it's just kind of like, you know, yeah, you know, I have a good life. Okay. Like, you said that with like no excitement, like no, like, you know, enthusiasm. So how good is it? I don't know. I just, you know, again, the more I've grown into my business and everything, again, definitely the more like I want to help people just like, you know, realize, you know, if they want something more out of life, that it's there for them. Dude. They just have to be willing to, you know, they just have to be willing to think differently and just, you know, again, train your brain, like read the damn books, like, let's talk about it. Like, you know, listen to these people. Let's talk about it. You know?
And that's the thing, man. Like so many people kind of like not even just the self-help educational space, but so many people kind of shit on like just education as a whole, like the mastermind groups, like, you know, how much money I've spent over the years on like, and it's so important, man. It's so critical, but taking that a step further, working on the self-development side of it, not like fuck all the masterminds and stuff that I've done that's kind of like focused heavily on real estate or investment or wholesaler, business, all this. It's like none of that matters if you don't work on yourself first. And to your point, like a lot of people don't even understand how they process things. And if you don't have a solid foundation to build upon, it's like the first thing that comes along, you're not even going to understand why you're feeling the emotions that you feel, why you're in a brain fog and why you have all this going on. Like you have to ask yourself some really difficult questions.
For sure.
And that sucks. Like it's weird. It's awkward. It's a lot of times you have to go back and kind of dig up like trauma from your past. Why is it when somebody yells at me, I think this, I feel this, I go into this mode. And a lot of times it's like, oh, well, I have to go back to that time when I was 6 years old and this happened with this person and it made me feel terrible. And I locked myself in a fucking room for a week, you know, and process that and try to start reframing and reshaping the way that your brain was programmed, you know? And that's hard. It sucks, but that's a part of growth, dude.
And I think another reason why it's so difficult is because like it's different for everyone.
Absolutely.
Like, that's there's the most difficult part because like only someone can help you like so much in that realm. And don't get me wrong, I mean, there's people out there. I mean, like Tony Robbins or like, you know, whoever, like, you know, or just like a local therapist.
Sure.
Like I think, you know, I mean, you know, I think we're all messed up in some way, shape, or form.
We're all deeply fucked up, man. Deeply fucked up.
So, but again, I think that's one of the most difficult things about it is that like it's different for everyone. So it's like you can read as much as you want or like seek guidance as much as you want, but at the end of the day, it's like you need to sit yourself down like with yourself and like, you know, really like process things and like think about it and like, you know, realize it. So anyway, I mean, then we can, you know, I can go down a rabbit hole with that, but yeah, so again, the more I, you know, the more I grow and everything, like
you want new challenges.
I want new challenges and I want to help more people realize more potential in themselves. And again, like, and I always say this too, I'm just like, you know, you keep growing, but like I want to grow with like my friends that are willing to grow with me.
Dude,
like I want to grow with like, you know, a group of guys. Like, and it's like, because you grow by yourself, man. It's lonely. You know? Now, is that going to stop me from growing? No. But it's just like, dude, if you can help, you know, a couple of your close guys like realize some things and it's like, yo, guys, like you know, this is what I'm thinking about. Like, what do you think about this? Now, are all of them going to be, you know, have that epiphany? Like, no, probably not, you know, but it's like, man, if you can grab like a couple, you know, that's like, I think that's like super cool. And like that whole like vision and mindset along with your spouse too, along with your family, like that's huge.
I was just going to bring that up, right? Like you're recently married. It's been what, a couple months at this point? A couple months?
Yeah, a couple months. Yeah. Nothing has changed though.
But so that's what I want to ask is like this topic that we're talking about right now, is that something that you've ever like actually talked about with your wife? Like the we have to grow together type of thing?
For sure. Yeah. 100%. Yeah. Yeah. And even before we were married, you know, because again, you know, we came from two completely different backgrounds and with occupations and whatnot. And, you know, at the beginning when we started dating, you know, she was like, what really like do you do? Like, what do you do? You know, I'm just like, you know, it's hard to put like a blueprint on it, but this is, you know, and then like I finally sat her down like in detail. It's like, you know, this is what my day looks like, and like this is what I'm trying to accomplish. So, and then like the more we started dating and everything, you know, she started to ask some more questions, and then like I gave her like, you know, some books to read, and then, you know, we talked about it and all that stuff. And now it's like she's starting to see, it's like, you know, she like, and again, she likes her job. She's a respiratory therapist at CHOP. She loves her job. She loves helping kids. But, you know, you grow into this amount per hour there, and your tasks, and like, you know, you do the same shit. You know, it's like, what? There's a ceiling.
It's different from the entrepreneurial world.
So she has a conflict where I like my job, but I also want to do more. But my job is very tiring. You know, she works 3 12-hour shifts a week plus overtime in some aspects. So it's like you work 12 hours and like you gotta be like on your game for 12 hours. Like, you know, you're saving some kids' lives some days. So it's like you're mentally exhausted. So it's like, you know, again, like it's tough. Like it's so now she's looking into certain things that, you know, trying to find, you know, kind of like a side thing to make some extra income to, you know, kind of, you know, like, hey, like maybe I want to go like part-time.
Okay.
Like, okay, that's a great goal.
Okay.
All right, how can we make that happen?
Yep.
So it's like, you know, she's starting to think in those ways, which, you know, I'm so proud of her, you know, to do that. So yeah, so that's the starting point with like kind of like those conversations. But yeah, you know, I tried to be an open book from the start. Like I just shared her my vision of like what I wanted, you know, our future family to look like, and like kind of like what I wanted, you know, our days to look like. And, you know, I wanted to share that and make sure that she believed in those as well.
Yep.
Because I think that's, you know, being on the same page as your spouse is, you know, vastly important, you know, in all aspects. So yeah. But no, those conversations are great. I love having those conversations with her and helping her, you know, in any way that I can. But, you know, yeah, she's a hard worker. She's gonna figure it out, you know, in some way, shape, or form.
Dude, and that's a beautiful thing. You know, it's like just like we were talking about belief and everything, right? And how you have to have belief in what you do. But I think more often than not, speaking for myself personally, right? It's like I have such a supportive fucking wife, right?
Yeah.
Like, and often I have crazy, like borderline delusional belief in a lot of the stuff that I do,
I'm with you.
But my wife believes in me, like I think even more than I do.
Yeah. That's powerful.
It's a humbling thing, but also awesome at the same time, you know? And
that's rare.
Yeah, man. Like
It's
when
rarer than you think, in my opinion.
You know, and I feel like it shouldn't be. Like I don't like giving advice to other people or anything, but when I can interject a little bit of joy that I have from my life and some of the things that have helped me in what I've done and some of the things that are so helpful in the relationship that I have with my wife. It's like, I do want to share some of that. And it's like, really, it comes down to simple relationship tips, right? Like, like you said, be on the same page, communicate, talk about stuff, and really share what your vision is. Where do you want to go? Where do you see this family? And that's not just like for a husband and wife relationship. That's fucking anybody, right? Like you brought up earlier how it's so crazy that so many people don't like talking about finances. Like all of me and my buddies, my family, it's like, dude, but we talk about it, you know? It's like there's nothing to hide, right? Like
if you don't talk about it, guess what's gonna happen with your finances?
Not gonna happen, man.
It's just like I think it's that simple, really, too.
Dude, absolutely.
Like if you don't pay attention to it, like what do you think is gonna happen to it?
Yep.
It's not gonna grow.
Yep.
It's not gonna, you know, it's not gonna go anywhere. It's not gonna make money for you. Like it's just, again, you know, it's I think that's obviously, you know, again, we can go through a whole rabbit hole of like, you know, society and the media, you know, portraying, you know, basically brainwashing us to think like ways that we do about finances and stuff like that. But that was the older generation too. I mean, like they, you know, that was just how they were brought up.
For sure.
You know? So like you know, our parents, you know, kind of portrayed those types of things onto us. To a certain extent, you know, like it's rude. Like, you know, like why is it rude to ask someone like how much they make? Like why is that rude?
Yeah.
Like really?
Yeah, I guess I can I can understand that, but it all comes down to like understanding the relationship that you have with somebody. Like I think it would be inappropriate, right, to be somewhere at a networking event and you never met somebody. Well, actually, I'm going to contradict myself here. But to just kind of be like, oh yeah, how much fucking money did you make last year? And I just met you 4 seconds ago. Right. However, especially in business and professional things, we kind of do an indirect version of that anyway, because it's never like, how much money do you make? But it kind of is.
Like, what did you do last
year?
Yeah,
because it's, like, how'd your Alex, how many rentals do you own?
Yeah.
And it's the same thing, but that like in a business setting, it's like that almost seems like not uncomfortable to do or to ask, but it also does allow you to have some insight into that person and what they do and what matters to them, right? But people that have a job would never do that.
No.
Right?
And it's like different if you're like in like an environment, like let's say you're going to like a dinner party, you know, with your wife and like, you know, a group of couples. You know, I've had people that have asked me like, you know, like, oh yeah, like how many, you know, like how many rentals do you own? And like, why, like, well, what did you do this? Like, and it's just like, okay, man, like, you know, I didn't really come here to like talk about this stuff, but you know, if you're asking me, I'll ask. But you're right. It is a little more uncomfortable in an environment like that than it is like, like I'm going to this networking event and I know I'm just talking to real estate people and we're just going to talk real estate.
Yep.
So, but why is that? Why is that the society norm? I don't know. I mean, you know, maybe it is because it's just like that's how, you know, society portrays it, you know, and that made us think like that way. But I mean, again, the bottom line is like, it's just, you know, pay attention to your finances and then they'll grow more. Yep. Learn about it more. But yeah. And another aspect too is going back to your vision with like your family or yourself and like where you want to go. And again, it's all different for everyone.
Of course.
Like, and you know, a guy I talked to recently, he was just like, what do you want your day to look like? Like what, like in like 5 years? How about 10 years? Like, what do you want that day to look like? Like, what do you want to be able to do like during the day? And I'm like, I don't really know. Like, what do you actually want? Like, what tasks do you want to do during the day? Like, I'm sure some of it involves some business, but like, what business tasks in your business do you want to do during the day? And then like, do you want to go and like play golf? Do you want to go and like hang out with your kids? Like, do you want to be able to do this, like that? Like, and that's different for everyone because everyone has different interests. So, but in a sense, and you know, again, for me, it's like I love golf. Like, I would love to be able to play golf every day without it affecting my company's growth or business ventures growth in any capacity. Okay, cool. Yours is going to look completely different than mine.
For sure.
This person's going to look completely different from mine. So again, in an aspect of like, you're like, oh, like I want to be just like that guy. It's just like, dude, like you got to have your own. You got to have your own portray of it, you know? You can't just, you know, you can like have it motivate you. Like, yeah, like I want to go in that direction, but like, you don't know what his like day actually looks like.
Yep.
You know?
Yep.
Like he could work 12 hours a day. Do you want to work 12 hours a day? Yeah, he owns 300 units, but do you want to work 12 hours a day?
Right. Right.
So it's just like those things I feel like people like don't understand as well. It's like, yeah, like that's the goal. Like I want to get to that. And it's just like, okay, like, well, what are you willing to sacrifice to get there?
Right. Right. And that's why I think like my hot take on that like leading question, right? Because I've been asked that by different mentors, different friends, different colleagues over the years and everything. And I think the underlying tone behind that question is, how do I want to say this? Like, do you want everything to be more comfortable? Like, well, like to me, that question, what do you want your day to look like is, like you said, well, I would like to have this leisurely activity. I'd like to be able to go play golf. I'd like to, for me, like I'd like to be able to wake up late with my kids, get them dressed, eat breakfast, take them to school. Then I'd like to be able to come to the office for a couple hours. Then maybe around lunch, you know, go get a workout in or something. Then come back and then go home and I'm home in time for dinner, right? Like that sounds like a picture perfect day. And that can be good if you're very in tune with what your vision is and you're okay with, because it's a trade-off. It's always a fucking trade-off,
yes,
right?
100%.
Like, I think it's naive to be like, okay, well, I have 50 rental properties right now, and in the next 3 years, I want to get to 400, and I want to go play golf every day, and I want to go to the gym twice a day, and I want to make sure that, you know, I never work more than 28 hours a week. It's like, that's fucking stupid. That's literally insane. Yeah. It's impossible to have both.
Yeah.
You know, so I think it can be a dangerous thing because it paints this unrealistic picture of reality and sets you up like already on the wrong foot. You know, it's like, if you have ambitious goals, you have to be so crazy dedicated and motivated to fulfill them and make whatever that is happen and become a reality, that you have to be okay with, like, dude, I'm okay having no fucking comfort for the next couple years. I'm okay grinding it the hell out. I'm okay, you know, if I start this new venture and it loses money for 18 months, I'm okay with that. Like, and I feel that question, a lot of times, it's usually asked by mentors trying to sell you something because they're trying to sell you a picture-perfect reality that doesn't fucking exist. So, sorry, that's a little hot take there. But
I understand that for sure because, again, it's, you know, we both know it's just like every day is different, especially in our industry. Things will pop up, new deals will happen, new ventures will happen, things will go wrong. So again, like, like that perfect day is like, unless like, I mean, again, like, you know, unless you want to hire 50 employees and like, you know, like I guess everything does everything for you. But again,
that's picture perfect too.
Exactly.
You got to get there. You're going to hire bad apples. It's going to cost you a lot of money. You're going to get sued. Like, there's going to be a lot of things along the way, man.
It's like, you're not going to like, you're not going to just like sit around. Like, again, like what's the next
thing? There's no
thing?
magic wand, but I think, like, obviously I am all for education. I've spent, I don't even know, well over $250,000 in the past couple years on education, self-development stuff. But there is a lot of shitheads too. And there's a lot of guys that will do exactly that. They'll just paint a picture-perfect reality that isn't real in any facet, just with the intention of selling you something. And I hate that. I hate it, you know?
So, no, I understand that for sure.
It's like the Instagram reel and the highlight of everything without actually seeing what goes on behind closed doors. It's like those memes or GIFs that you see of like the iceberg, right? It's like you see this tiny little piece at the top, but below it's like there's so much other stuff that nobody even knew existed. You didn't know about the struggle. You didn't know about nothing. But if all you see is the highlight reel, it's easy to look at and be like, well, fuck, man. Alex goes and golfs 3 times a day. Why can't I golf 3 times a day? But they don't know that Alex grinded his dick off for the last 10 years building what he did.
Right.
You know?
Exactly. So that's, I mean, for sure, that's definitely more of like an intimate conversation. Like if you, like someone does ask, or like, you know, you do have that conversation with someone, it's like, all right, it's like basically like sitting down. It's like, look, I'm going to tell you how it really happened, you know, like how this really happened. Like, and it's not just like, oh, yeah, like you said, like, oh, what do you want your perfect day to look like? Oh, yeah, like do this and that. It's like, okay, like, well, how do you think you can get there?
Yeah, let's do that tomorrow. It's like, no, let's get there. And maybe 10 years from now, right?
Exactly.
Like, you know?
Yeah, it ain't happening next week.
Let's paint that picture perfect, but
let's go back all the way here. Let's go way back here, and then, like, now let's do the most important next steps to, like, you know, get there. So
that's huge.
Yeah, for sure. I totally understand that.
That's huge, man.
Yeah. Sure.
So, we know that redevelopment stuff is hot on your radar. You're still going to continue buying single family and small multi-families in Coatesville. Do you still consider buying rental properties elsewhere?
It had to be big enough and worthwhile, probably. Like probably not like small multis. It had to be like a commercial property. That would just like make complete sense, like an apartment building in some sort. And I would probably JV with someone. I probably wouldn't do it myself. That like is like maybe more expert in that location, because to kind of go off track a little bit, you know, what also me and my partner are developing right now is like, you know, like a lending business, lending division in our company. So what we also want to accomplish next year and like the years after is, you know, we're going to start a fund, most likely in 2024, do our first raise. And then we want to find really good operators in certain areas that it's like, okay, like, yeah, like you find these deals. It's like, okay, yeah, like, and you need like a couple $1 million. Here you go.
Yep.
All right. And let's just structure the deal where like, we get, portion of like, the equity and whatnot and, all that stuff. So while also doing hard money lending to all of our local guys that we like know and trust, we've been doing that for this year and like, it's been pretty successful so far. So we're excited to grow that, and really we're just
I can speak as a real life testimonial. You funded me on one of the last flips that I did, and that was a beautiful process, man. You guys got your shit together.
The value we try to bring is like the ease of the money. We're not the cheapest, we're not the most expensive, but it's really just the ease. Like, again, we're really only lending right now to operators that we like know and trust. New investors, we wouldn't unless the deal's like super good and it's in an area where like we're comfortable. Like, hey, like if you screw up, we'll take over this, and we don't really, and we're comfortable with that. Because like we know how to deliver that finished product. From our experience. So, but right now, yeah, just, good operators in good areas. We got some operators in Wilmington and, Delaware County and, even in southern Delaware, in like Kent County. But yeah, reach out if you ever need capital, in those senses for projects. And we're just in capital raising mode on the other side for like private lenders, like, look, you're looking to get a decent return on your money. You're looking to diversify your portfolio. We're going to have this set raise, probably beginning in next year, that it's going to be X percent. If you want to sign up with us for a year or two, and you can get a little bit higher percentage, but that's kind of like how it's going to work out. We don't know the percentages yet, so that's why I'm not saying numbers.
Gotcha.
But yeah.
Dude, that's fantastic.
Yeah.
That's fantastic.
And like me and my partner talked about it too, like, it feels right too, like that what we're doing with this. Like, I think that's going to help us, like, accomplish more goals and getting into more projects that we like, and enjoy to do, like the church one. Mm-hmm. We've already had more conversations with that JV partner on a couple other buildings, possibly. Mm-hmm. So we think that could just be like a snowball effect. And anyone else that would be interested, we're all open ears to, like, hey, like I got this, syndicated development opportunity and wherever. And it's like, okay, we look at it and we like, okay, cool. Yeah. Like, I really like this, this seems like, so that's the avenue we're trying to go. And like, yeah, we're excited about it. So,
I love that. I just thought of something else that we have to go over also.
Okay.
So tell us about I forget where it is, the Airbnb, the short-term rental, the place that you bought in Florida, somewhere in Florida, right?
Yeah.
Because that's another venture, right?
We got connected with an operator down there just from, connections I have up here, in mastermind groups, So he's been great. The operation's been great so far. I think, so this is the first full year it's been operating as an Airbnb. And my partner went down and enjoyed it for himself like one weekend in September, so that was good.
Has it been a full year? Has it been a full year?
Yeah, this is the first full year. So we went on Airbnb like last December.
Okay.
So this is the first full year.
All right. Got
January to December.
Got it.
I think we're on track to almost break even. So I think it's gonna cost us like maybe like $10,000, like out of our own pockets.
Okay.
But the way that we look at it is just like, again, going back to like, what do you want, like, what specific things do you want in your life, or do you want your day to look like, or do you want like kind of like the life? It's like, dude, I want to be a freaking snowboarder. I hate the cold. So it's like, all right, I'm going to start looking down there and just try and like, how can I own a property that basically costs none of my own money out of pocket? And then just like later on down the road, like I could just like enjoy it. Like, so again, that's been really like, we were excited to do that. It's been good so far. We've seen a little bit of a slow tick happen with like volume, with bookings. Because we're projected to hopefully gross over 100 this year. I think it'll be like around like like high 80s, low 90s. Like I said, like, like 100 would be like our break even if it grows to 100.
Still though, and not for nothing, because this was your first Airbnb property anyway, right? It's across the country. It was a new venture. To be year one into it and be like, okay, because you're talking, you may end up being $10,000 out of pocket, but in reality, like that purchase price was higher, right? It was like you're into this thing for over $500,000, right?
Yeah.
Okay, so just using those numbers, even if you're $10,000 out of pocket in this thing, it was your first venture into this type of asset class and everything, and new business relationship with a guy that's operating and everything. That's fucking fantastic, because that may be a $10,000 cash loss, but I'm sure the debt pay down,
like the
equity and
IRR.
appreciation on a higher asset class, right? Like you may be 10 grand out of pocket, but you actually made money
on paper. Yep, correct. Yeah. So
that's a win.
Yeah,
dude. That's a huge win.
We're more than we're more than happy with it so far, and like like we're gonna probably right now we're really focused on like raising capital for the fund, but like next year like maybe we might look for another one. Possibly. For me personally, I'm also I own some rentals myself without my partner Josh. So the first rental that I bought myself, I'm actually gonna put on the market. So my tenant's moving out on Friday.
Ooh, okay.
And what I looked at that was it's on a really good street in Coatesville. Taxes are higher, like significantly higher actually than most of ours. So it's like 'cause it's on a nicer street, nicer area. It cash flows, but it doesn't cash flow like that great. So it's like but I have all this equity in there. So like my return on equity is like not like the best. Got this, obviously random idea. I just want to have I want to buy a Jersey Shore house. I want to try to buy a house down there. In my opinion, those prices aren't going down anytime soon. They just been going up and up and up. So like my idea is like try to get into the price points now, and out there, do the same thing like Airbnb or like do like weekly rentals during the hot season. Try for it to sustain itself. Most likely, I'll probably be a little bit out of pocket each year. Just find a property that like I feel confident in, like those numbers, and like I think, okay, cool. If I'm out of pocket, 10, 15K, like it's not a big deal. So me and Rachel picked a location, Brigantine. We have a guy down there that's looking for us for like off-market opportunities, and. Yeah, the goal is just like, rent it out, 90%, of the time. And then we enjoy maybe like a couple weeks out of the year. But again, it's just something I want in my life for my future family. I want to be able to go down there, enjoy the beach with my future family, have a place down there later on. I don't need to use it that much right now, especially in the in-season. Like, like in December, if it's not getting rented out, like we could just go down there for a weekend or whatever. That's the vision with that. And that just brings more residual. It might not bring as much investment value. Right. It might not bring as much investment value, but it brings a lot of residual value for me and my family. So it's like those are the things I'm starting to think about more as like obviously I met Rachel, I got married, all that stuff. So that's another venture I'm trying to do. I'm gonna try to do a 1031 exchange, so like hopefully it all works out. Knock on wood. With those time frames, but I'm gonna try to do a 1031 exchange, so like hopefully it all works out. Knock on wood, with those time frames, but that's those are the kind of two things that again those were more residual value aspects rather than like okay like I'm just gonna look at the numbers and like look at returns and whatnot.
Right.
But like you said with like the Deerfield one, like on an IRR standpoint, like. It's still solid.
Sure.
Like, it doesn't, it still makes sense in those regards.
Yep.
And we have a higher interest rate on that one as well. We're confident, in the next couple years when hopefully interest rates kind of like solidify in like in an area. We'll do a cash out refinance, pay our private investor off that invested some of the down payment, helped us with the down payment down there. And then, it'd really be like, ours truly, and like we'll have that like equity, like, standpoint in it. So yeah.
I just thought of something.
Yeah.
What is your take on focus?
On focus, yeah. So
because it's something that anybody that is entrepreneurial struggles with.
100%.
No question about
so
it.
I struggled with
I am very guilty as well.
I struggled with
that.
But
you got a lot of new things that you're looking at doing.
I struggled with that big time in the beginning. I'm sure with just like anyone would.
You're struggling with it right now, brother.
Yeah.
You're talking about all this other stuff.
Not as much, and I'll tell you why.
Okay.
Not as much, and I'll tell you why. I'll go to the beginning. Yeah, the beginning, like, we like, I think like me and Josh, we had like 8 units or like 10 units. Like we bought like, okay, cool. Like now I'm going to read a book about like apartment buildings and like, investing. So like read a book about that. Like, okay, like let me try to connect with people that are like in this space. And then I read a book about like development. Like, all right, like let me look at that. So it's like, again, like there's so many different ways to make money in real estate. So and then obviously area based as well. At that time, like, all right, I'm just going to buy a rental here. And it's just like, now you're scattered. And it's just like, when you buy enough of those, it's just like, oh my God, like this is like a lot of work. Like, because if you're the landlord and the property manager, like, you're just like, shit, like I got to drive here. So when we started to solely focus on Coatesville and we developed like a little team out there, like that's what helped with a lot of the time off of me and Josh's back with like, now like Jerron is boots on the ground for everything, like all inspections, maintenance requests.
So that's like an in-house property management guy that you brought
I
in.
mean, we don't, he's not on payroll, but we tend
I'm not the IRS here, bro. I don't,
yeah, but like, he's technically not like an employee of us, but like, he's just like, our independent contractor.
Yep.
Yeah.
Okay.
Yeah. So, so that's what's helped us in that area. The Airbnb property, that's completely passive. That guy down there does absolutely everything. The only thing, he sends us a monthly report. So we gutted that thing too. He managed the whole rehab. He sent us updates every week. Obviously, did I have as much control over the rehab as I would if it was like, if I was managing it? No. But like, what the hell am I going to do?
Course,
fly down there every week and try to. So he has been great in those aspects of like relieving a lot of time on our hands off that as well. We pay him 20% of gross income every month. He found us the deal. He managed the rehab. He didn't really charge us for that, besides the commission he made like on the sale. But then like we signed up on his Airbnb team, and he charges us 20%. We don't do anything. It's like, I know passive is a strong word, but this is probably the first truly passive investment that we made in those regards.
And that's a beautiful thing.
Yeah.
What about the process, though, from start till now, right?
Acquiring and, the
analyzing, building relationships.
And that's what people
and
overlook.
It's easy for us as the business owner to overlook also, right? Because it's like, well, I enjoy this. This is growth. This is me learning new things.
Yeah.
This is me making new relationships. It's time. It's time spent. And, often I have to kind of check myself too. And it's like, I think I told you the story about how I wired 25 grand. I didn't do it, but I had a $25,000 wire go to the wrong person.
Yeah.
I got totally screwed on it. But it's funny, like going through, and obviously I tried everything I could to get it reversed, get my money back and everything, and it did not happen. But it's funny, even as like we spent, and I had an assistant, luckily, thankfully, that was able to handle a lot of that for me. But even going through that, I kind of knew in the back of my mind that it would be easier, and it sounds ridiculous.
Yeah.
It would be easier to go make another $25,000 than to recoup it going through all of this red tape and BS. And that sounds crazy, but it's like kind of how you have to look at anything, right?
Yeah.
It's like how you have to look at that new business venture, how you have to look at that next deal. It's like, okay, yes, there is potential, and it might be growth because I'm going to learn new things. I'm going to meet new people. I'm going to grow as a human. But is my time better spent finding that next rental?
Yeah.
Like, what is the return on time? And it's so easy to not look at that.
Yeah, absolutely. Yeah, and that gets overlooked in the aspects of like, again, it's like, yeah, like, okay, like, yeah, like this Airbnb's passive, but like, yeah, like in the beginning, like it wasn't passive by any means until it got up and running.
Yep.
So, and it wasn't the first deal that we looked at, it wasn't the first deal we ran numbers on. And, and it's just funny because it makes me like, people like ask me like, it's like how many hours do you work a day? I was like, dude, I don't keep count. Like, I don't know. Because, like, I could be on my computer for 2 hours doing work, like, in the morning, and then I'll take, like, a 2-hour break, and then, like, I have, like, meetings for, like, 2 hours, 2 hours in the afternoon. And then, I'll take a break to have dinner with, like, Rachel, and then I'll be on the computer for, like, another 3 hours. Like, doing work and, like, searching for next deal or, like, catching up on emails. Like, for me, that's all work. Like, I hate catching up on emails. Like, who the hell wants to do that?
It's terrible.
So it's just like it's so scattered in that sense. So it's just like, but like
it's hard to track.
It's hard to track, and it's just like I don't know how much time I work. It's just like things come up, and then like I just have to complete those tasks
and
that
come
up.
Yep.
Like how to handle them.
Yep.
Sometimes I hand those off to other people. Sometimes I don't.
Yep.
So it depends what the task is. So if I have tenants that have my cell phone number still, that when I was managing the properties, they text me sometimes still for just stupid stuff that I've told them 5 times, like text Jaron. He's your first port of contact now. So like I have to relay that off to Jaron. But there's other tasks that like, this banker needs this from me. Like I can't hand this off to anyone. I just got to do it now and get this done so they can process this loan or whatever. So it depends.
Yep.
So,
totally does, man.
So
totally
yeah,
does.
But we kind of got off track a little bit, but
Dude, that's the beauty of doing this and everything. That there really is no format. There's no structure other than I want to sit down with people that I like and have interesting conversations about things that I think other people will want to hear about as well. Which I just had one last interesting question to ask you, and now it eludes me. Shit. Oh man, it was a good one too. It was going to be fire.
Yeah.
Oh, give me a second. Okay. Man, it's gone.
It's gone.
Oh, story of my life, man. Yeah. It happens. Well, we can't end on that note. So,
well, going back on focus as well. So, like, that's why I think, yes, I'm getting into new ventures recently, but at the same time, the time constraints on them were only for like a short amount of time. So it's like, okay, like the Airbnb. So
that's going back to,
so like after the Airbnb was up, like
with potential massive upside.
Correct. So like for the Airbnb, it's like, it took a lot of time for the first, 3-4 months. But like after that, like after it's operating, like again, I just get sent the report every month. Like it just comes in my email, like, hey, this is how much we made this month, blah, 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 So, so with that, like that's done.
Yeah.
Like it's like, okay, cool. All right, what am I focusing on now? Like, bringing teen, that whole scenario. Yeah, again, it's going to be tough for probably the first like 6 to 12 months, maybe. Like, get that thing up and running as a rental and maybe finding a manager down there. But again, it's just like for that time. It's that for that time frame.
Yep.
So the big things that we're focusing on are finding new redevelopment opportunities in Coatesville and raising capital for our fund. Those are the two main things that we're really focusing on.
Got it.
That we're putting most of our time on. And I would really think because we have the church project going on right now, it's really just raising capital for the fund, the new fund that's going to be up. So that's really what we're focusing on, and that's what we're putting all of our efforts in. We're having phone calls every week, trying to just meet new people, trying to see what strategy we want to go with, like how do we want to kind of like, steer in the direction of conversations we want to have people, what type of people we want to meet.
Sure.
All that stuff. Do we want to go with people that have like, big life insurance policies that have high cash values? Do we want to, talk to people that have self-directed IRAs or just IRAs in general and educate them?
Yes, you want to talk to all of them.
It's just like, but it's really learning. It's like, okay, like how can we tap into those sources? Like who do we need to talk to? So, we're having those conversations every week with each other and, meeting new people and, going that route. So
that ties in. I remembered what I wanted to ask, and I'm sure that that's going to probably tie into your answer. So I know a lot of people, like when they're first starting, either buying rentals or buying flips or anything like that, right? It's like most people have a job, they have an active income, they start building their portfolio. And one of the questions that a lot of people ask is like, at what point does it make sense to leave my job and just solely focus on the rentals? And for you, like I said, I mean, you were doing dispo for Revamp up until however long ago it was. Again, terrible timelines. What's it been, a year and a half, 2 years?
Yeah, it's been, I think I stopped like end of summer of like 22. I think it was 22.
Okay.
Summer of 22.
Something like that. I don't know.
Okay.
Yeah, I'm terrible with that. But regardless, like, so the question is, like, on the active income side, because, like, right, with rentals, we massively analyze and underwrite and purchase deals based on really a relatively low cash flow number, right? Really, we're kind of banking on the long-term debt pay down, appreciation, equity and everything. It's like, okay, at 45 doors, you've definitely got like some cash flow coming in and everything. But like at what threshold do you think, I guess it's going to be different for anybody, but like, I guess my question is, what is your take on active income as you are building a rental portfolio?
So to go back of when I started, so the whole job thing was, so I did it differently. I mean, the reason why I did it differently is because I had low expenses and I was young. So, I didn't keep my job before I went into real estate. Like I quit my job and then I went into real estate. So, again, I probably have a higher risk tolerance than a lot of people. But again, at that point, I didn't think it was that risky because I could just get another job. And I was 23 and, I still lived with my parents, after college. So didn't think it was that risky. So in that aspect, I'm probably not the right guy to talk to because, like, I think you should just really just, like, write down, like how you're basically, like, how much you need to live. How much you need to live. Like, write down that. And then just, like, write pros and cons. Like, okay, what happens? Like, how much of a nest egg do I have? Like, what happens if this happens? Like, and you just kind of go down the list and you just see, like, if it makes sense. And honestly, it really just comes down to how much do you believe in yourself as well. Dude, that's, like, I mean, I think that's the bottom line. Like, how much do you actually believe in yourself? Like, to just make it happen.
Yeah, because the numbers, they don't really matter, right? And it's like, dude, I'm sure you can
calculate as much as you want. Like, any financial advisor will be able to tell you to don't quit your job, like, or whoever, like, but at the same time, it's just like, it's belief in that sense.
Yeah, man, I think that there's a massive value in that as well, right? Like, if I were to look back, would I have made the same decisions today now that a husband, I have 3 kids, right? Like, would I make the same decisions today that I did, 10, 11 years ago when I first started in real estate and started a business and everything? Even if I didn't have the knowledge or resources or experience or anything, would I do that today? And I think the answer is yes. And that really does all build from that belief, albeit most people would just call it delusional belief. But
that's also an excuse for a lot of people. Right. That's an excuse for a lot of people. Oh, I have family.
Dude, you have higher expenses? Cool, wonderful. That means you're going to fucking make it work. You're not going to let your kids go hungry. You're not going to risk the roof over their head. It's like sometimes it is okay to say, I'm going to burn the boats and I'm going to figure it out as long as you know. Like, dude, there's no other option.
Sometimes it's not the way that you want it to go. Like, sometimes you just, like, there might be a couple months where it's like, you just got to make money however you can make money.
Dude, absolutely.
Like, it's like, oh, I didn't make money in, like, wholesaling or, like, flipping. It's like, okay, just make the money now and, like, continue the progress of, the venture that you're going for. So that's how all beginnings work, man, I feel like, in that sense. That's how I did, too. I mean, I was just working on and end stuff, while I was just learning about real estate and, I got into a flip and then it went like shit, lost all my money. I had to go get another job for 8 months because I ran out of money. And then I quit that one 8 months later. And then, and then I got my real estate license and I did some of that stuff. And then it just snowballed from there. And then I bought my first flip, my first rental, and then, But going back to active income, and I'll get a little more technical, I guess. I didn't have a lot of active income besides doing a couple flips a year. Throughout the time I was buying my initial first rentals. Basically, flips and flipping was my active income. And, that's kind of like where I've always had that battle with that because I just wanted to buy property. But, again, like you said, it's just like, how much really money is going into my bank account?
Right. You got to be able to pay the bills too.
And that's one of the reasons why I came in dispoed for revamp, because I wasn't making a lot of money at the time. I only had, a couple rentals myself, had like 10 with my partner or something. And then it just got to a point where like the volume just spiked for us. And then I was just like, dude, I can't invest the time anymore. I'm not going to give you the effort that you need. I just can't because again, we didn't have the property manager set up at that point. I literally had at least 8 to 10 rehabs going on in Coatesville at one given time. So, the active income for me now is the lending. So, and I finally feel like I found that kind of
it's a parallel
division.
Yeah, because it's a parallel to what you already do.
And it took me 6 years. So it's just like, I mean, again, sometimes you're gonna find it right away, sometimes you won't.
Yeah,
I tried other things.
Right. Sure,
I tried wholesaling. I didn't like it. I didn't like it. I didn't like being on the phone all the time. It's just, I mean, I think I did I think I did 2 deals, and I was like, you
just brought back a memory. You almost got me sued before you came and worked here. That's right. Thanks for that, buddy.
Which one was that?
I don't know. You were using some of our tools or whatever, and you cold called somebody on the known litigator list, and I got served, and nothing ever came of it. But it's
so it was just. Yeah, I just, I tried to make a little team, and I burned a decent amount of money doing that too. But anyway, decided that wasn't for me. So, because again, that time.
But through that, it's like you had that same thing in the back of your mind. It's like, well, I need active income as well, right? Because it's easy for people to look at, okay, well, I'm buying rental properties, I'm bringing in cash flow. It's like, but even if you do have a significant amount, right? Even at 45 units, you still have to focus on other active income to be able to supplement that, because that goes back to what we're talking about with having reserves and having things set up and everything and being prepared for a rainy day.
And luckily for me, I was able to find a couple pretty sweet deals that the burrs were pretty rewarding in a sense. So I was able to put a decent amount of coin in my pocket off a couple deals. Off the refinance. And that's tax free. So that gave me a little nest egg at that point in time. But again, at the same time, it's just that's just a one-time event. And if you're not doing your own lead generating, again, because we work with a ton of wholesalers, we work with a ton of agents, in the Coatesville area. If you're not doing your lead generating, it's,
got to keep the pipeline full, man. You have to.
Yeah. You have to. The wholesaler is going to make that probably spread that you would have made off your cash out refinance, because they're getting it for this price and you're getting it for that price. So that's the development, I guess, of my active income journey in a sense. But I always had hard time because again, I just love just buying the rentals and I just want to focus on that. But at the same time, it's just I'm buying a house, I need stuff, I need to, I now have a mortgage payment, I have, car payment, it's, gotta pay bills. And you just can't rely on cash flow alone to, sustain that. Cause everyone's like, oh, I'm financially free. I make $5,000 a month in cash flow and my expenses are $3,000 a month. I'm like, okay. You have to replace a roof. This is like 15 grand or whatever, 10 grand, 10, 15
exactly
grand.
Right.
So, okay, well, that cash flow's gone. And you didn't have a chunk of money because you're using that on your expenses. So yeah, it's a balance that will keep balancing,
of course,
this way and that way, and you just gotta pay attention to your finances, pay attention to your bank accounts,
100%.
See where you are.
I think that's super insightful.
Yeah.
For, because I think everything that we just went over kind of paints a full picture of the different avenues and what you have to do as a person, as a business owner, as an individual, as a husband, to be able to navigate that, right? And it is a never-ending process. So
it is a never-ending
awesome,
process, man. And I can definitely say it's worth it in my eyes, But again, it's not like it's the right path for, anyone and anywhere. It's just, what you determine that's right for you. But, yeah, I mean, again, there's just... in my opinion, there's more to life than just, working a job that, totally provides, not the greatest value to you. So,
and real estate is a beautiful way to do that.
Beautiful way,
So if people want to send you deals, you're a Coatesville buyer, you may buy some stuff, Airbnb, short-term rentals, and you also are able to fund through hard money lending and everything. So how can people find you? How can they reach out?
So best thing is just text me, honestly. I'll send my number 610-585-8027. Just introduce yourself in a text message and just like, hey, I'm reaching out because I saw you, on the podcast. And then, I'll be able to reply, pretty quickly from there. Other than that, I guess, I can give you the email to post on a post or something.
Yep. We'll drop that in there and everything.
And yeah, I don't really have like a website. I know I have to get
you don't
a website.
Need a website.
But
no, man, you're good. You're good as long as you're on social media and everything, which you need to post more, by the way.
I do. I'm the worst with social media.
We'll work on that with you.
I rely on him to just like bring me into like we're doing right now. But yeah, Alex Martyn, Martyn. You can just search me on Facebook and Instagram, and I have stuff there, and you can direct message me on those as well, and we can just connect. Go from there.
Love it, man. Well, thank you so much for coming on. This has been an awesome conversation. I think people will get a lot of value out of it.
Sounds good. I hope so. Yeah.
Thanks so much, brother. Appreciate you.
Cool.
Boom.
Cool.